If you want to know more about the different types of health insurance available to you during open season, then stick around. This video is for you. Hi, I'm Tiago Gleeger, and I help federal employees grow, manage, and protect their wealth. And if it's your first time here, go ahead and subscribe to the channel and hit the bell button so that you don't miss a thing. We're going to be doing a lot more stuff like this in the future. Also, if you stick around until the end of this video, I'm going to let you know how you can get access to our health insurance cheat sheet that we have for our clients. So make sure you get that. So let's jump in. Every year during open season, employees have to make a decision about which type of health insurance they're going to want to be covered under. Plans change every year, and you'll see changes to the coverage amounts, and you'll see changes to your premium amounts. And it's important that you keep up with those details so that you can make a decision that's right for you. We're going to be talking about the main details of specific health plan types, including PPOs, FFS, HMO, point of service, high deductible, and consumer-driven plans. OPM offers resources to do your own research so that you're able to find the plan costs and all of the plan details, but they expect that it's your responsibility to know what you are looking at. And I'm pretty sure most of you don't spend your leisure time in the evenings reading about financial planning topics like health insurance. So it's my hope that by the end of this video, you'll be able to have more information in your toolbox to be able to pick the health plan that's right for you and your family. So the first one we're going to cover are HMOs, and that stands for Health Maintenance Organizations. HMOs have historically been known for being focused on wellness and prevention. Okay, so what that means is they typically require that you go see your primary care physician frequently for the majority of your care. Since this primary physician sees you more often, they have a good idea of what's going on with you and the type of care that you need to remain healthy. This also means that most, if not all, of your care is going to fall with providers that are in-network. This is a really important detail because if there's a specific doctor that you need to see regularly, you need to make sure that this doctor falls within your network inside that HMO if you're going to choose to go with an HMO. Something else to consider with an HMO is that if you require medical care from a professional that is considered a specialist, you're usually going to first have to contact your primary care physician to get a referral. And while this isn't necessarily a game changer, it's an important factor for you to remember. If you don't do this, you risk not having coverage if you go to visit a specialist without first having a referral from your primary care physician. Something to consider if you have a specific doctor that you need to see. HMOs also have copays instead of deductibles, and there are a variety of different sub-HMO categories that apply different principles to how each doctor works. The next type of insurance we're going to talk about is fee-for-service, or FFS. A fee-for-service plan is a more flexible type of insurance. With these plans, they'll typically pay the medical provider directly, or they may reimburse you after you file an insurance claim for medical treatment. And so what this means for you is that you have a little more flexibility in choosing your medical care providers. So you can change doctors more frequently if you like, without having to first talk to your primary doctor. If your fee-for-service plan is an indemnity plan, then you have what's called a deductible. The plan will only pay for a portion of the medical costs and pass the rest on to you as the insured. And it's not until you reach your deductible limit or your max out of pocket that the insurance company will begin covering the remainder of the cost for your medical care. And out-of-pocket maximums reset every single year each time there's open enrollment again. So just know that you may be putting more risk to yourself to have more expenses if you see doctors with this type of plan. Inside some of these plans, you might have access to what's called a PPO, or a preferred provider organization. As the name dictates, it's a group of medical providers that have all agreed being part of this group, and as such, they reduce the charges for service. So an employee seeking medical care from a PPO would likely pay a little less out of pocket, but as with everything else, there are exceptions, so be sure to look carefully before you sign on that dotted line as this plan being your plan. Okay, number 3, point of service. A point of service plan is more of a combination plan. So if you took some of the nice things and features about an HMO and you put them together with a PPO, you would get this plan. Enrollees are typically less restricted than inside an HMO since their range of doctors is much larger. And enrollees tend to also have slightly lower costs and out-of-pocket expenses compared to a regular PPO. And you'll still select a primary care physician from the list that they let you pick from, and you'll still need to have a referral if you're going to go see one of those specialists. But in these manners, it's kind of like a regular HMO, except that you'll find that the cost to you tends to be a little bit less. Now, it's been my experience with our clients that point-of-service plans sometimes can require you to use generic brands of prescription. So if you're someone that's on continued medication, please be sure to check this detail out and make sure that your medication is covered. Any cost savings that you're going to get from this can very easily be blown out of the water by any extra expenses from the prescriptions, especially if you take medication that does not have a generic counterpart, or perhaps the generic brand doesn't work for you as well. Another point to consider is sometimes health insurance companies will call specific prescriptions as experimental. Please be sure you check that with the insurance plan before you opt in for that plan. Okay, so the next one is high deductible health plans. And a high deductible health plan is one where an enrollee typically has a higher annual expense to them. So you might ask, why in the world would someone select a high deductible plan? And there's a few reasons for that. For one, the monthly premium tends to be lower with a high deductible. And this makes sense, right? Because you would be paying more for actual Medicare. So if you're someone that does not frequently require doctor visits and you're generally in good health, perhaps this might be a good plan for you. Yearly checkups and wellness visits are generally included in this, so don't think you can't go see your doctor every year. Get those checkups, it's important. Another incredible benefit of high deductible plans is that you have access to what's called a health savings account, or HSA. This magical type of account allows you to deposit money into it on a pre-tax basis, grow it with investments, and then use that grown money in a tax-free status if you're using it for qualified expenses. If that sounds similar to an FSA, well, that's because it is. Except it's better because any balance that you don't use in an HSA will actually roll over into the next year for you. Even in years that you don't have an HSA, you're still able to keep the HSA, not like the FSA, where you tend to lose your money if you don't use the FSA account. If you use it for non-qualified expenses, you'll be penalized though, so you have to be careful. But with that said, there are so many things that insurance plans might not cover, including Medicare. So you can use your HSA to cover these costs in a tax-preferred manner if they are considered qualified expenses. That's not a bad deal. So it's a very underutilized planning vehicle, especially by young people. So my young feds out there, don't neglect looking into the high deductible plan. It can really be a powerful tool for you in the future. So the last plan we're going to talk about today is consumer-driven health plans. This one is the odd one out. They're still high deductible plans, but as the name indicates, they tend to be more customized plans, and it really isn't just one particular plan type. So as a high deductible plan, you still have the ability to set money aside on a pre-tax basis to help you pay for healthcare, but the cost of healthcare will be higher to you than some of the other traditional types of healthcare. These plans tend to have a lower premium, and as such, they're popular by employees that tend to be healthy and conscientious about their health and the care that they need. In other words, it allows enrollees to look around and select competitive care in an effort to reduce the costs. The philosophy behind it is to put the power in the hands of the employee, and so it hasn't been too popular of a plan since most people just don't have the knowledge or the time to research the world of medical care. You have a lot more choices available to you in terms of medical care providers than in this plan than compared to a traditional healthcare program, but that also means you have a lot more responsibility on your part to do the research and find out what works best for you. So that's it for now, and you can see that there is no plan type that's perfect for everyone. It all depends on your specific needs. There's a lot to think about because each plan type serves a specific group of people and their needs. And for my faithful video watchers, you stuck around till the end, and I promised you a cheat sheet on the details of different health types. So you're really going to want to get this. And so the way you do that is you just send us an email saying you'd like a copy to info@rmgadvisors.com. And if you have questions about what we talked about today or any other related topics, feel free to find us at rmgadvisors.com. And the last thing I have for you today is just to remind you to make sure you subscribe to the channel and turn on notifications so that you can know when we put out more videos like this. After all, it's not just your money, it's your future.